Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Monday, the 28th of June. Starting off with 88 Energy, which is a stock obviously not for widows and orphans, a point which is underlined by that rally that the shares delivered at the end of March and the decline that they delivered in the early part of April. But the current situation is that we've broken this falling wedge or triangle, I suppose, formation, which has been in place since the end of March. The resistance line broken there around 1.3 pence, and above that looking towards the top of that rising trend channel from March, as high as 2 pence or 2.1 pence over the next month or so, maybe by the end of next month, while we're above 1.3 pence. Moving along to a stock which I haven't looked at a lot in the recent past, maybe hardly ever, I think, probably, but here we have Chroma Security Solutions, which is difficult to resist today with the break of and the gap higher through the triangle that's been in place since February last year. That's also the area of the 50-day moving average at 71 pence and above 71 pence on an end-of-day close basis, looking to the top of that rising trend channel from 2019, late autumn 2019, as high as £1.10, and that could be hit as soon as the end of August while we remain above the 70 pence area. But the big plus, I suppose, is the gap out of the triangle that the shares delivered. That's normally a sign of decent momentum, even though this is obviously not a very liquid situation. So that's could be a false flag on that. On to a stock which I wish I'd covered more of as well, which is Cambridge Cognition. Here we had the breakout through the main £1.40 resistance area. It took a couple of goes to do that. But we've got this sort of U-shaped reversal for the stock. Also looking to break the £1.70 area, which was resistance for the shares 3 years ago now. So a weekly close above 170 could take the shares on to £2.80, which is the top of the 2019 trend channel. Time frame on that, the next 3 to 4 months maybe, if we get a decent quick break of 170 over the near term. But the good point here, I suppose, is the way that today's price action has seen the shares gap through £1.40 very successfully and bounce off the 50-day line at £1.30. So everything looking rather good for Cambridge at the moment. Another stock which has gapped higher today is Eco Atlantic. And looking at the situation here, obviously shares trying to regroup after their decline a few years back. But what we have on the daily chart at the moment in the near term, rising January trend channel heading towards 33 pence, and maybe that's the 2-month target for the stock, maybe the end of August. Nice gap above the 50-day line today through 23, 24p, and any end of day or weekly close above 25 pence plus, which is initial June resistance, should take us on to the 33 pence target relatively quickly, but we're allowing up to 2 months for the stock to do that. Haydale is next, and here we've got a situation where we've had a decent bottoming out process over the last year or so. The current or the latest news here is the break of that resistance line there from August last year, around 8 pence. And the longer we stay above 8 pence, the greater the chance of a move towards the top of the rising August trend channel at 14 pence. Perhaps that could be hit by the end of this August. Only back below 7 pence in the 50-day line, really delaying or questioning the upside scenario. A stock which may have caught some people out, given that they thought that the company was going bust, and maybe that could still happen. But we've got a sort of Amigo situation going on with Hurricane at the moment. The big plus on the technicals, though, is the way that the 2.1 pence May neckline resistance has been broken quite comprehensively today. Above 2.4, we've got a best case scenario target as high as 4.3 pence, which is that February resistance line projection. But obviously, beware of the fundamentals here. Don't want another Iconic or Amigo type situation going on there. Those can be somewhat painful. Rather more straightforward, I suppose, is i3 Energy, where the shares still pushing ahead, anticipating the forthcoming dividend early next month, allegedly. Here we've got a situation where the shares gapped up higher last week or the week before last. We've got this rising trend channel from February. That's heading towards 14 pence, and that could be the end of August target for the shares, while they hold above the gap and that 50-day moving average level, currently around the 8.9 pence area. So above 8.9, looking for 14. and only really questioning the break to the upside if we fall back below the floor of the channel from February around 8.3 pence. At the moment, though, shares following the momentum of that gap that we had earlier in the month. Moving along to a stock which has its fans, I know, IQai, and here it's been a slightly tough negotiating area for the shares around sort of 6 pence to 10 pence. We're still in that range, but bounced off the 50-day line today quite well, around 7.5 pence, and the longer we stay above the 50-day moving average, the greater the chance of a 2 to 3 month target up to 18 pence for the stock at the top of a rising 2018 price channel. I suppose if we're waiting for any trigger, it would be a weekly close above 10 pence, but obviously that does give away quite a lot of the upside. But after the false, the bull trap through June, through 10 pence earlier this month, one would have thought that the stock is now ready for a more serious move to the upside. Covered Cadence before, just worth watching and keeping an eye on. This situation. Looks relatively smooth. The reason for saying that is we've got a rising trend channel from the early part of last year. Top of the channel heading towards 40 pence, which could be seen maybe by the end of August. Floor of the channel around 24 pence, and so 24 pence the support ahead of a potential move towards 40 pence, which would be reasonably good return for sort of short-term traders. Another situation where it looks as though we've got a recovery in the air is Pantheon. What looks attractive about this now is the way that the shares closed above the top of the gap there at 37.5 pence or 37.25 pence at the end on Friday. They're also moving up as I speak, in fact, at the moment. And that gap close, that exhaustion gap close to the downside, suggests that we could have some decent momentum on the upside above 37 pence, looking to as high as 60 pence, which is the top of that October trend channel, and that might be seen by the end of August. So something to look forward there, potentially. A stock which I covered, I think, a few times in the recent past with its news has been remote monitor systems. But what I didn't notice, which is rather strange actually that I didn't notice it, was the way that we've had an island reversal, a bear trap island reversal, so a bear trap below 1.1 pence. We gapped down in June earlier this month, and now we've gapped up again, so that's sort of a double bullish signal. We've also had sort of decent follow through on the upside from the gap higher, and the normal rule is, I suppose, if we can have a decent end of day close above gap, i.e. it remains unfilled, then on the open of the following day one would be looking for a potential long there. If you're an aggressive trader, that's what we had on Friday. Not sort of breaking through the 50-day moving average yet, but an end of day close above that at 1.25 could set remote monitored systems on the journey towards 2.2 pence as soon as the end of next month, rather end of August, especially while we hold above the top of the gap there at just around the 1 pence area. So above 1 pence, looking for 2.2 by the end of August on remote monitored systems. Finishing off with Xtract Resources, which has been on the back foot for a few months now, really consolidating that spike that we had, or the double top we had up through 8 pence in the first quarter of the year. Current situation is we've had a bear trap from below the 200-day moving average around current levels. We've also had bullish divergence as well in the RSI window, so we had a lower low for the second half of June, but a higher low in the RSI window. That does suggest that we've got positive momentum brewing. All we're waiting for now really is, I suppose, an end-of-day close above today's current high at 3.8 pence. If we can get that, then the initial target here would be around 4.5 pence, just near the 50-day moving average by the end of next month. At this stage, only really well below 3.5, really questioning the upside scenario. That's it from me today. More updates tomorrow.